Russia may step up fuel exports to Asia in a bid to find alternative markets as European sanctions tighten, according to oil and gas consultancy FGE. More Russian-made naphtha, a fuel primarily used to make plastics, is likely to head into hubs such as Singapore and Fujairah from February, when EU sanctions kick in. China's purchases of Russian oil and coal are also peaking. 6 months into the conflict, costs are really piling up for Russia. Disposable income of households has significantly dropped. Inflation is higher than wage growth. And according to the IMF, the Russian economy is going to contract by 6% in 2022 and 3.5% in 2023. For more on this now, let's go to Craig Erlam, who is Senior Market Analyst at OANDA. Craig, many thanks for being with us this morning. First of all, how resilient, I wonder, is the Russian economy? Because analysts are now talking about a proxy war between the US and Russia that could well become a forever war in Ukraine.
Yeah, I mean, I think the resilience has surprised people to some extent. I think the level of growth decline that many were expecting 6 months ago is going to prove to be lower over the course of this year. So that resilience, I think, has caught people a little off guard. But at the same time, it's also extremely uneven. There are certain industries which do rely on imports of goods from outside of Russia, which are feeling a much greater strain than other industries. And then you have the likes of oil and gas, which really is papering over the cracks because revenues have still been extremely strong while Europe has been weaning itself off its dependency.
As you say, a lot of sectors in Russia really depend on the West. I mean, manufacturing, transportation, depend on capital equipment from the West. Some analysts are saying this could lead to public unrest. Do you agree, first of all? What sort of impact would it have on markets as well?
I think it will ultimately lead to some unrest the longer it goes on. Like I say, yeah, I think as the economy has shown strong resilience, and if we continue to see that across other sectors, as we do see Russia itself obviously become a little bit more dependent on Asia and other regions, and remove its reliance in many ways on the West, we may start to see that resilience improve, and therefore we may see conditions improve a little bit there as well. But it's going to be extremely gradual, and I still think there's going to be a long period when we do see those industries feel the pain increasingly, and that could potentially therefore lead to some unrest. And I think the strength of the ruble is a bit of can become a bit of an issue as well. One of the things that's been underplayed is because the ruble fell considerably in the aftermath of the initial invasion, it very much reversed course and is now 20% higher compared to where it was pre-invasion, because imports have effectively declined to such a great extent, while exports of oil and gas, etc., have continued to remain strong. So that's had a really strengthening impact on the ruble, which creates challenging conditions in other ways as well.
Surely strong ruble and stock exchange as well. Thanks for this update, Craig Erlam.